Now, with only 4 days more to end the year, the Ghana cedi is on the verge of recording one of its strongest performances since 2017. That will also make it one of the best performing currencies in sub-Saharan Africa, supported by the COVID-19 pandemic, which has ravaged global economies, diversified exports, and the Bank of Ghana's Forex forward auction. The local currency has only lost 3.2% in value to the US dollar on the interbank market. It is even less on the retail market. Let's hear from Courage Mate, who is a senior economist with Databank Research.
There seem to be two reasons why we've seen a slowdown in activity on the foreign exchange market. One of them being that with the elections out of the way, the policy outlook is clearer now, and so the uncertainty and the apprehension that was priced into the foreign exchange market and driving safe haven demand for dollars, there's been a slowdown in that aspect of activity on the market. Then another factor why the market appears to have seen a slowdown in activity in the past week is that we were approaching the Christmas holidays, and so those investors who already took position, some of them are already closing their position, and as we get to the end of the year, some positions have already been closed, and so there is no incentive to engage in major movement on the market right now, and that explains the slowdown in activity on the foreign exchange market in the past week. Year to date, the cedi has done marvelously well against its performance last year, and within the context of the COVID pandemic, there's been a 3.5% depreciation against the US dollar on the interbank market.
A bit more context for you. In 2019, the cedi depreciated by 12.9% against the dollar as compared with 4.9% in 2017. Let's head into the discussion and make sense of this further. Joining me via Zoom is Courage Buti, an economist with Databank Research, and Dr. Williams Pepra, who is head of finance at the Valley View University. Great to have you this holiday, gentlemen. I'm sure you guys are celebrating, but we had to put you in for a discussion. And I'll begin with you, Courage. We had your colleague, Courage Mate, explain what accounted for this strong performance. Tell us more. Despite the pandemic, the cedi performing so well.
Yeah, sure. Merry Christmas to your listeners and Happy New Year in advance. My colleague was spot on. Let me give it some historical context. Look at it from 17, 18, 19, as you rightly recounted. In 2017, we're looking at some 4.9%. Then in 2018, I think slightly higher, around, I think 8.4 or so percent end of year. 2019, we did something in the region of 12.9%. Now, you can talk of the 2017 figure in the 2017-2018 in the context of IMF. We're under the IMF program, the extended credit facility, and we're under the straight watch. The balance of payment support from the bank, the IMF, and all of that came into pushing us a bit. And with that comfort, investors were not too agitating. And so that could explain that low rate. The test case was actually in 2020, where now we are outside IMF in election year. And those are mainly two triggers, for a depreciation spiral. Really. And we saw that from the start of the year, both a combination of prudent management and then some structural adjustment over time has helped the cedi to where it is now. What do I mean? The Bank of Ghana, like my colleague recounted, the Bank of Ghana introduced a number of measures on the market with the bi-weekly auctions and then ways to also intervene on the market regularly to supply liquidity so that whenever there is a shortfall, they can smoothen the volatility. That is one aspect. We've seen also over time that we've developed, unlike Nigeria and in a few other countries who are oil dependent, we have diversified our export base a bit. And then now it's even including a fourth force in non-traditional exports. Now, that broad base of export relative to our neighbors is the reason why, whereas we had oil crash along the year, which affected countries like Nigeria, Angola, and their oil majors, we saw that its impact on Ghana's external balances was not that significant. In fact, as it's now, we have over 4.1 months of import cover, which is enough to take us through the period. And with the cocoa syndication loan coming in to also again boost reserves, we see that we are in a good position even heading into the seasonal demand season, really. And so I think the combination of those prudent management on the market and then the structural changes over time, which is serving us well, will be a good part of why the cedi is performing relatively better this year.
All right, I'll turn to you, Dr. Pepra. So generally, the economy is facing challenges because of the pandemic. So I guess people will be asking, so who is benefiting most from the city's good performance, and how does this translate into boosting the economy, really?
As you mentioned, you asked the question, who is benefiting? Ghanaians are benefiting because our purchasing power is now high. Because our currency is becoming stronger, as has been indicated by my colleague. And based on that, we'll be able to do more. And also to touch on it is the FDI inflows. If you look at the first quarter of the year, our FDI inflows went up. And it also helped the city to perform well. Though we were in COVID, the country also still recorded some inflows coming for capital development within the country. So these are the good sides of having a strong currency at the moment.
Great. And Courage, what's it looking like going into next year? Are we going to sustain this good run?
I honestly think so. There is no reason not to sustain it. I mean, if we follow the argument we are making, once our export sector is a bit more balanced and broad-based, and then we can expect that as we all come out of the COVID situation, of course, our major trade exports like gold has held the fort during this period and made up for the losses in crude oil. Cocoa too has played its role in that regard. Going into next year, of course, monetary policy around the globe is kind of relaxed, and then so interest rates will be subdued for some time. It means that gold will again continue to hold the fort for some reasonable period until the recovery is strong enough. And then we see also that the economy is responding. We are in a contraction, yes, and then of course a recession for the first time in some 37 years, yes. But the movement from quarter 2 to quarter 3 show that the economy is on the path of recovery, and I expect that we will return positive growth in quarter 4. If that is the case, and we recovering, and the current government or the government that had just won a 4-year mandate, of course, subject to whatever the court actions or whatever actions from the opposition may be and what the outcome will be, it appears that the program is to invest for some 3 years or the next 3 years ahead of us in what they call the enterprise support program, where they've targeted a few other sectors with over 100 billion of investment in those sectors. If that holds true, what we would have probably achieve is that our export volumes will grow. Already we've seen that companies like the auto manufacturers are setting base in Ghana. There are hints that a few others will come on stream by quarter 1 next year, and then all of that. All of these plus some of the other programs on board, if they actually are realized, and the thing the GEXIM is doing, the Ghana Exim Bank is doing to support the non-traditional export sector with the export of the cashews and all the other vegetables and all those other stuff. When that is actually gaining traction, we expect that they would boost the external balances, and that should stand as well going forward. So the picture is looking good, but subject to prudent economic management, subject to prudent debt management, and then, of course, our ability to hold the fort like we're doing. We all understand that COVID has battered the economy. We all understand that government has had to go out of the way with increased fiscal spending to try to navigate the situation. But going into 2021, there should be some deliberate attempt to come back to the path of consolidation. If that so happens, we can sustain offshore investor inflows, and then with the help of the external balances, the cedi should be on a strong footing going into the future also.
Right, and I'll continue from where you left off about prudent economic management, and I'm coming to you, Doc. What must managers of the economy do? What can you add to that? Plus, I mean, you talk about the fact that when we talked about the trickle-down effect of the city's performance, that Ghanaians have good purchasing power. That may be debatable depending on who is listening. So what should managers of the economy do to sustain this good run and make Ghanaians feel that they are more empowered to purchase like they want to?
Okay, so my colleague talked about the export bits. So mine is to also look at the import wing. We need to lower the importation of items so that when it becomes an issue where we will not be sending more currency out the city to go and purchase more dollars to pay suppliers. So government, who is the biggest spender, must make his agenda that he purchase made in Ghana. Once government is focusing on buying made in Ghana, it will reduce the bill for us to pay on importation. So government must make sure that he champions his agenda on purchasing made in Ghana products.
Right, and meantime, Doc, you are urging government to address the capital account deficit. Just to explain to our viewers, a deficit in the capital account means money is flowing out of the country and suggests that the nation is increasing its ownership of foreign assets. So how is this going to improve on the exchange rate situation?
So the more government sends money outside the country, what it means is that we need to use our cedis to purchase more foreign currency. And then as we are consuming someone's foreign currency, it weakens our local currency. So government must focus on, as I've said,
right,
to work on the buying things within the country and then reduces sending money outside to pay other countries' bills. In effect, we are importing another country's inflation into our country, which can go into the next year. Government must try to work on that. There are more measures the government can use to do that, using the duty approach, maybe making sure that duties are increased. But I know it's also have its effect, but government must do that. If government decides to buy made in Ghana products, our import bills will reduce.
Great.
And it will have an impact on the current account deficit.
Great. And on this subject, I'll leave the final word to you, Courage Buti.
Okay, sure. On the import bit, fact is that over the last, if you like, 4 years, from 2016 all the way till now, we've seen some great improvement in the import bills also, in that it's declining. And what are the things playing the role? We've seen that we've started domestic production of gas. And mind you, the thermal plants that we have, most of them used to use the heavy fuel oil and all those other liquid fuels that were imported. Now with the domestic production of gas, what is happening is that a few of them, plus the transfer of one of the plants, I've forgotten the name, to Takrady now, and then depending on solely the gas produced, indigenous gas produced, it actually reduced the fuel import for power generation. So if you look at that section of the external account, you realize that oil import is consistently on the decline. And if you realize, government say they are in an agenda to renegotiate the power purchase agreement with about 15 IPPs. I think they've been successful with 2 of them. We don't know the progress of the other 13. But that successful negotiation meant that the 2 of them have now decided to switch to the local gas as part of reducing their capacity charges. And then all of that, plus the projects that extended or did the reverse flow of gas from the Western Region Enclave now to the Tema Enclave for power generation, meant that we can now be able to depend more on the locally produced and cheaper gas for power generation. And it's a reason we are seeing some consistent decline in the oil import bill. The non-oil import bill is also not growing as much. In fact, there has been some slowdown. You can attribute that this year to the COVID situation and the fact that it's affected trade flows. But the general trend has been that the economy's productive capacity is actually improving. And this project of 1D, 1F, and then it's centering around the local raw materials in our various surroundings. If this program really gains traction, what it will do is that things like the fruit juice and all those other basic stuff we import can actually be produced internally, and that could save us. It may not be significant, but so much, but it will save us some substantial amount of foreign exchange. And those are the little processes that will lead to currency stability in the future. On the capital account front, I think the help has always come from our sovereign borrowings, the Euro bonds and all of that.
Right.
This year, government is indicating that they are doing about 5 billion if the market conditions permit. Should they be successful with that, what that does is that from the very beginning of the year, we are having a substantial boost to the reserves that can actually help us navigate the first quarter pressures, which we all know exist, from foreigners by repatriating their profits to all the other things up and settling letters of credit and all of that. So if they are successful with that, chances are that what we saw in beginning 2020, where the 3 billion euro bond helped to exceed the appreciation by first quarter, we may be repeating that trend again.
Okay.
And if all things go well, we should be able to sustain it.
Thank you so much.
Let me make this last comment.
You just have a minute.
You know, during the COVID, government asked nationals not to transfer money out of the country.
Yeah.
It's going to be a big problem because multinationals during COVID, like MTN and Co., they have made huge profits. So going to next year, government must look at that. How much of that amount of profits by these multinationals would he allow them to transfer out of the country? It's going to have a big impact on the economy because we have deprived these multinationals dividends this year. So their investors will also be hoping that in 2021 some amount of money should be sent to them, and government must look at that. I know that whether the Bank of Ghana, the governor should sit with them and have a plan of transferring these funds to them, because definitely they will send these dividends to their shareholders.
Okay. Thanks for the heads up, Dr. Williams-Pepa. Thank you very much, Courage Buti. Happy holidays to you, gentlemen. Thanks for joining the program. And you're watching The Marketplace. We're taking a short break. When we come back, a warning from the Food and Drugs Authority this festive season. Stay tuned. Welcome back to The Marketplace. The Food and Drugs Authority has cautioned the public against neglecting labels and writings on food products to avoid consuming expired ones, especially during the festive period. Ashanti Region Head of the authority, Nora Naki Talabi, advised consumers to carefully examine labels on products purchased to ensure consumer safety and avoid food poisoning and other health-related issues. She was speaking with my colleague, Prince Apia.
You get these hampers already prepared. So you want to give somebody a gift. This is the season of giving. So all of us are trying to give to our loved ones and our friends and acquaintances. So you purchase them. By the time you bring this, the person is gifted the hamper. So you bring it home. You are not actually, you don't make a conscious effort to check what kind of products are in. I gave that scenario because personally I received a hamper. I came home and I decided that let me break it out. Let me look at what is inside. In breaking it out, I realized that about 50 or 70% of the items were expiring at the end of this month. So one, the items are not expired. As we speak, is not expired. And I think that is what it is. The business person has stock. They have stocks that are almost expiring. This is a season that we all buy. Now, if you buy and you're going to use everything in the hamper within the stipulated time, there's no problem. But the issue is that we as Ghanaians keep things. You get the items, maybe you have already purchased all the things you need for Christmas anyway. So these items, you leave them somewhere, or either you also gift it out. And so if you don't take time, or if you are not cautious, then by the time you start using them without checking the expiry date, and I realize that for us Ghanaians, when the item is in our home, we feel it is part of, is mine, and so you don't worry about whether it's expired or not. And so the advice is, if you receive a hamper, that's a good gesture. Please, that's what we are advising. And if you want to make hampers, then probably, let's say you are an institution, you want to give out a lot of hampers, then it's better you go out and procure the individual items you wanted to put in the hamper, and then give them to somebody to parcel them for you. With that, then you know exactly what you are putting in the hamper, which is better than going to buy the already prepared one, which are the risks that we are seeing.
Great warning for us at this festive season. Let's turn attention to our COVID-19 pandemic survival series, where we feature entrepreneurs who have been hit by the pandemic but managing to stay afloat. This afternoon, we'll be speaking with the CEO of Purple Trends, Joyce Owusu, to learn more about how she's made it this year. We want to remind you first, though, of her story. Watch this clip.
Is a fashionista. Her passion, oh no, her curiosity led her to try her hands on making necklaces, bracelets and other accessories.
I saw a beaded chaliwote, or a flip-flop that had been decorated with beads. I saw it to be something very interesting, something nice, and I wanted to try my hands on. So I remember I bought the slippers and I got the beads, and then I designed it. I just had to critically look at what I saw the first time and try to see if I could replicate or emulate or do something similar or same as I had seen.
Joyce didn't know how good she was at making the stuff she does until she started doing them. How she's able to do them, she has no idea. She would make accessories for friends and family. Then she realized it could be good business.
I hadn't even conceived the idea of getting it into a business. I thought I was just having fun. So I realized that anytime I wore one to work, people liked it. Then I was working with a firm. People liked it. They wanted to know where I bought it from, who made it, and all of that. So I told them I make it myself. People started to request for it. So I made them, took them to work, and that was how I started. I started with 50 Ghana cedis. My very first capital, the money I used to start the business was 50 Ghana cedis. And what I did was that anytime I sold, I added up to I added a profit back to whatever amount I had to buy the raw materials. And that's how it's been so far.
With that amount, Purple Trends GH got to his feet. All that while in school. For the past 2 years, she has had to juggle between school and her passion.
Trust me, it's been wahala. But God's grace has been enough. There were days I only slept for just 2 hours and 3 hours, yes.
Joyce has done amazing work for projects such as the MTN Hitmaker Seasons 4 and 5 and Miss Ghana 2015. All that hard work has paid off.
So that video was shot 4 years ago whilst Joyce was still in school and just beginning her business. And so it's great to have you on the program, Joyce Owusu, after 4 years. Thanks for joining us on The Marketplace. Said that there are 3 necessities for humankind: food, clothing, and shelter. Is that supposed to say the fashion industry was not as hit as other businesses during the period of the pandemic? Okay, looks like we're having challenges bringing you Joyce on Zoom, but we'll try perhaps subsequently to get her on the program. But that's that inspiring story that got us all talking 4 years back, and hopefully we'll find out how she was able to fare during the period of the pandemic. Subsequently, it's just a disappointment that she's okay. I'm told she's on now. Joyce, good to see you. Yeah, we'll try and do this in a minute and perhaps continue in the afternoon at 5. Just tell me, how is business going?
Business has been good. I can say that there has been a recovery after the lockdown. You know, a lot of weddings were on hold, but right after the lockdown, people rushed into doing it. It's been good so far. It's amazing.
On that note, tell you what, we'll try and reach out to you again at 5 p.m. for a full conversation as to how you've been able to make it through this period of the pandemic. Unfortunately, we ran out of time, but that was CEO of Purple Trends, Joyce Owusu there. Wrapping up the marketplace. Thanks for watching. My name is Darryl Kwao.